This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
What is up, everybody? Happy Thursday. Welcome back to another episode of Benzinga Live. We've got a packed show today and a lot to talk about. I know you guys in the chat probably want to talk about some NVIDIA earnings, maybe some BABA earnings. We could talk about the GDP numbers that came out this morning. I mean, as far as the data we got this morning, the jobless claims came in lower than expected, showing a still tight labor market. But that GDP number also came in lower than expected. So it was kind of a mixed bag where it's not like both came in, the GDP didn't come in hot and the labor market remained tight. And I have some thoughts on that we can get into in a little bit. But basically, and I'm not this isn't my, personal, I've read this other take, so I'm not going to take credit for this take, but I see some truth to it where a lot of the layoffs that we've seen, and I've talked about this on the show, have been in the tech space, and the big tech companies, whether you're talking Amazon, Apple, Microsoft, have so much weight in our lives and also just like what we see in the media that when we saw all those companies laying people off, I think a lot of people thought, oh my God, everyone's laying people off. But with the unemployment numbers and the jobless claims, that hasn't been the case. A lot of people saw, okay, Microsoft, Meta, all these people are laying people off, and they think that's indicative of the overall economy. Not necessarily the case. And my hunch is that a lot of these people that were working for the big tech companies, making, I don't know how much, say you're a mid-level engineer at Meta making $250,000. You probably don't need to file for unemployment right away. So when you see these jobless claims numbers that are lower, I bet a lot of these people that have been laid off in tech haven't filed those, unemployment, whatever it is. So it might not be reported in there. Whereas if those layoffs were coming from another job sector where the pay's not maybe as high as where it's in tech, maybe you would see more of those jobless claims coming in. So again, I don't have any data in front of me or anything to back it up. That's more of just a hunch, more of a take, and we'll see if that ends up being the case. But quick rundown for the show today. I've got the Stop Hunter hanging out with me backstage, Stephen Hode. We're going to talk to Stephen about some Natty Gas and what's going on with some tech stocks, including maybe we'll ask Stephen. I don't know if Stephen followed the NVIDIA earnings this morning, but and then after that, we've got Steve Kalasian coming on at around noon. So packed show today. Again, we've got a lot to talk about. I think without further ado, let's go ahead and bring our first guest on of the day, Mr. Stephen Hode, the Stop Hunter. Without further ado, let's give Stephen that special intro. He deserves it. Stephen, how you doing today?
Hi, Aaron. I'm doing very well, thanks.
Beautiful. Yeah, I don't know if you can see behind me, but we've got all these trees behind me are just covered in ice, so it's not. We're not ready for golf yet, unfortunately.
It's not that bad over here.
All right. Well, all right, Steve, I'm going to go ahead and pop up your screens and let us know what we're going to be talking about today. I know when I reached out to you, one thing I wanted to talk about Natty Gas, and I've been talking about on the show. It's been getting beaten up, but the past 2 days been pretty good. I mean, the past 2 days, Boyle's starting to bounce back. What do we got the Natty Gas futures here? Looks like we're looking at, correct?
Yeah.
So what do you see in this chart, Stephen?
Right. Just before we go on there, Aaron, I've got a double bounce on the sound. I don't know what's going on, so I'm hearing you twice after every repeat.
Okay, let me try to fix that real quick. Is it maybe coming out of your end twice? Because I don't think I'm trying to see if
my end's twice here.
Okay, here, let me see if we can get let me get one of my producers in here to troubleshoot this real quick, because I know that'd be frustrating to keep the thing going. Let me bring you back on, Steven. Hey, Rohan? Can you help me for a second? My our guest is hearing me twice. There's an echo, but I'm not in the StreamYard, or I'm not in the site twice, so maybe could the sound be coming out of the screen share too, Rohan? That's not in the stream. That's only backstage right now. 1 second, guys. You guys are watching some live technical difficulties. It's all good.
Hey, Steven. I'm going to mute Aaron for a second here. So if you can reshare that window, but make sure you share without audio. There's a little ticker selected usually when you share Chrome. And it'll say like share audio or not. So if you remove that and then reshare, it might fix that.
So let's see.
Oh, that sounds nice.
Does it work now?
Hang on.
Okay.
No, I can hear myself back again.
Hmm.
And Steven, do you have echo cancellation turned on?
Where do I do that?
Don't worry about it. I just did it for you. So you have it on. Thanks for being patient with us, guys. Yeah, so if that's on, you still hear us twice, or you can hear yourself?
No, I'm hearing you twice. I'm not saying anything. I can hear you twice.
Are you sure you don't have two windows open? Or the YouTube?
About 10 seconds of delay.
Oh, 10 seconds delay. Okay, so do you have the
No,
YouTube do you have the YouTube stream opened in a different tab? Either close that.
See what's happened there. Yeah, there we go. There we go. We've done it. Yeah, no, it opened up automatically on my screen. Yeah. There we go. I've lost it. Yeah, fine. Can you hear me now?
Yes, sir. I can hear you loud and clear.
Done. There we go. Fixed.
Beautiful. Sorry about that. All right, we're going to go ahead and pop your screen back up. So we're taking a look
brilliant.
at Natty Gas futures. Thank you, everyone in the audience for being patient with us. So Natty Gas futures. Yes. I mean, this thing has been getting beaten up, Steven. People have been trying to call a bottom, to pick the bottom, find it. We've got 2 green days in a row, I think. I mean, how are we feeling about this chart?
Well, this one's a weekly candlestick chart going back, 2019, 2018, and just to show you the big run up in the price, up nearly 600% to those highs, and then we had that huge fall down just over 80%. Wanted the longer term chart here for just to show you where the noise historically has been, and at the moment we're back into this sort of range which it's historically been in. And everyone's and for the record, this week I've never heard so much talked about Natty Gas. It's just been everywhere, and everyone's been asking where is the bottom, like you say. And at the moment, fundamentally, it could still slip down further. As you can see, we've got these bottoms over here at the start of COVID time, March 2020. So 1.5, 1 could still be more downside. It's a volatile commodity. It's very hard to trade. The fundamentals aren't telling me that it's turning bullish anytime soon. It's driven by weather conditions, all's looking quite normal. Other supply and demand issues, all fine. Zooming in a bit there, I've got this this is a daily chart of the same contract, but with a bit of extra information. Now, seasonality wise, we're coming into period. If you look on the left hand side there down the bottom, we've got some good strong strength coming in. And what I like to look at is the commitment of traders data, which comes out on a Friday. The large speculators normally follow down this price, or more highly correlated to it, and we can just see last week we had a upturn in those large speculators, so they've been building up their long futures positions. So maybe that's a sign that there's a possibility of some interest to the upside. But I still don't think, if you flick back to that longer term one there, the upside isn't that great, because I think it's 3.5 area back to the upside. I've got a short-term chart. I like to use something called Renko charts. You can see the last 2 days up over 15% combined. You can see there's today's action. It's up 2-3% today. And if we're looking at Fibonacci lines and historical price levels in the recent price action, I think 2.5, 2.6 could be a good upside before it starts slowing down. And then, like I say, I think the fundamentals are the key here at the moment.
Steven, something I'm curious about, and I know I didn't probably give you a proper enough introduction with all your credentials and background and everything, but I know you have a background in energy. What makes Natty Gas so much more prone to these like very crazy volatile moves, very cyclical compared to other? I mean, even I know oil. I mean, obviously oil prices is volatile too, but I don't think as much so as Natty Gas. Why is that?
No. Nat Gas has the nickname of the Widowmaker.
Okay.
And that's for a reason in that area, because day trading it is extremely difficult. It's very volatile on hot and cold weather snaps. Remember, the Nat Gas futures contract here is American based, so it's American supply and demand, storage, that type of. There's so many variables that go into it, and because it provides, for the US economy and households and all that sort of stuff, quick snap in the weather and you get a spike, maybe there's not enough storage there or supply coming on, and all of a sudden you can easily turn around very quickly in the nat gas world. And like you said, it's one of the most volatile of the energy stocks to be trading consistently. You've got to have deep pockets maybe if you want to trade this, and ride those storms.
So, I mean, what about from a more, like broader outlook on Natty Gas? How do you see its role kind of in the next, like, say, 10 years? Like, I know a lot of people say, oh, Natty Gas will be kind of a stepping stone from where we're at now to cleaner energy. Do you see it like used as that, like in an interim in kind of like in the middle, but until we get to more renewable or cleaner energy used in that, or do you think that's kind of overblown and that it's not necessarily that important?
Yeah, I don't think that's going anywhere soon. Over here in the UK, actually today, one of the opposition MPs come out with their policy of wanting to turn the UK into a green superpower and getting rid of things like nat gas and oil, that sort of thing, and concentrating on wind and solar and all that sort of thing. But I think if you take it to the US case, I can't see it changing. There's so much demand in industry and homes for this stuff that I can't see it really changing that much over the next 5-10 years. There's a drive for new forms of energy, EV cars, maybe affecting gasoline, that sort of sector. But no is the simple answer. I think it's still going to be around for a while yet.
All right, so real quick, let's recap. What are you? I'm not going to ask you for like a price target or anything, but would you be like willing to take a stab at some Natty Gas down here for a swing trade for a couple of weeks, or no? Why not?
I do trade it all the time, and I trade it either with futures or over here we can trade it with CFDs and spread bets as well as an alternative. I did a video earlier in the week on it, actually on Monday, and I still had an opinion of weak bearishness still in there. Despite these couple of days, I still got a feeling that we're going to be in that range between 3.5 and 1.5 for a while. I can't see it getting back up to those highs unless something major happens geopolitically, or we have another COVID virus hit us or something like that. I can't see it. Low range. That's all I'm thinking. Range trading, low numbers. That would be my call on it at the moment.
Got it. Well, all right, Steven, let's transition from Natty Gas into some U.S. tech. So NVIDIA reported this morning, good report, stocks up a bunch. I don't think it's up enough though to keep the NASDAQ. No, NASDAQ Composite's still down in the U.S. Today about 0.4%. So relatively I mean, it's kind of a down day, but somewhat flat. So, but tech's been. So what is this heat map showing us over the last month?
Yeah.
What is it?
No. So this heat map is year to date of the Nasdaq 100 stocks. So I thought I'd just pull this one up just to see where the strength is in the Nasdaq at the moment. And actually, if you go back to this chart, this is a world. It looks a bit of a mess, but it's the world stock market's all year-to-date performance. And you can see the Nasdaq, the blue line, right at the top, best index on the planet at the moment, up about 9%. And then you've got the Irish stock market, the French, and a few others following soon. But it's out there. So then I thought, well, what's pushing it? And as you can see, year-to-date, Tesla is the big winner there, 66%, Meta up 38%, Warner Brothers up there in the top right, 60%, NVDA, like you just mentioned, up over 50%. So they're the main drivers there at the Nasdaq 100 currently. It's an interesting mix of sort of different sectors, subsectors.
Yeah. And I'd be curious because, I mean, you know, these stocks are the ones, specifically Tesla, NVIDIA, that have been outperforming the market the past, 2 months since we've started 2023, and they've been killing it. But they're probably also Tesla, NVIDIA, some of the ones that were down the most the preceding 3 months. So it's kind of like catching back up. Yeah. But, I mean, I see Tesla up 67% in 2 months. And now we just got, decent economic data. I'm pretty sure the bond market, I mean, people are now talking about the potential for the U.S. to reach 6% interest rates. If we even get somewhat close, even if we get above 5%, I can't imagine that Tesla wouldn't come back down a little bit. I mean, I don't know. I mean, I am not going to go out here and like buy puts on Tesla or try to short it because I know I've heard enough horror stories about that from people trying to do that. I don't want to get in on that. But it seems a little overextended to me here, and I don't really have any like fundamentals to back that up, other than the fact that it's just up 70% in 2 months, and it's a really big growth company, and interest rates are set to rise even higher.
Yeah, I wouldn't argue with you.
Okay.
You would think there comes a point where there's going to be a bit of profit taking as well.
You'd think.
With the uncertainty ahead, and then that's going to lead to a bit of a sell-off and bring those numbers down to where they probably should be rather than what they are at the moment. NVIDIA, I think I still like NVIDIA, with the semiconductor sector for this year. It was another one of the sectors I picked at the start of the year to watch closely. But again, 57% that quickly, I'll be locking in some profits maybe. And like you say, some options plays there might be a better strategy to think about over the rest of the year. But yeah, I'm not sure about Meta there either, up 39%. Now that to me is a...
Yeah, I mean, I think at least with Meta, you could argue that when it got down to, I forget what it got down to, $100 or $110 or whatever, like there was... Some people were looking at it essentially as a value stock because the company has like a pretty strong cash flow, and it got to a point where it was just like, all right, this company's making. I don't think anyone made that argument for Tesla. This is a value company at this point. So, but yeah, NVIDIA to me, I mean, it's one of my favorite companies, and I've talked about for a while how, and especially for me, like having a very long-term outlook on the stocks that I'm just buying and holding. Like NVIDIA will be present in essentially every single emerging technology, whether you're talking about AI, whether you're talking about self-driving, whether you're talking about technology in healthcare, whether you're talking about, whatever it is, NVIDIA will be part of it. So like it gets really expensive sometimes. I probably wouldn't even be chasing it right here if I, got a bonus and needed to put some money into but like, I feel pretty good about, and again, I'm not talking about trading. I'm not talking about, a swing trade or anything like that. I'm talking about just adding and holding for 10 plus years. I feel pretty confident that 10 plus years from now, NVIDIA will be higher than it is today.
Yeah, out of most of those stocks on that screen now, I totally agree with you again. I think, like you say, it's got its fingers in so many future pies, the different key sectors that I can only see it, being one of those strong stocks, Even something like Google up there, again, it hasn't been doing that great recently, but it is again in, like you say, the AIs, all these different types of sectors, and they're the companies I like to look at for maybe the longer term.
Yeah, I thought it was silly a couple weeks ago when Google's stock went down like 12% in like 2 or 3 days because people thought they're like so far behind in AI. Because first of all, we're still so early in AI that I think it'll be hard to tell which companies are really like that far ahead. And like AI in itself, one of the whole parts of it is that it like is dumb. You teach it, it gets smarter, whatever. So to me, it's like Google's so big, they're not just going to pass up the opportunity of AI. So the fact that it went down like 12% in a couple days, I mean, it was more than $100 billion of market cap wiped out of Google because of these like fears over the AI. I thought that was a pretty like gross overreaction. And I wouldn't mind, when that happened, I said I wouldn't mind going long Google here, and I still wouldn't mind going long Google.
No, I can agree with you, and I think it's a good long-term bet. Long there, like I say, with NVIDIA, AMD's pretty decent, Microsoft, even Apple. I saw today they're doing their diabetes tech into their watch that might be coming out soon, which is a long-term thing, which, they're diversifying into new areas to build out their value.
I will say some of the medical features on like the wearable tech from Apple, the Apple Watch, are pretty incredible. My uncle, basically his watch told him he had an irregular heartbeat, like an arrhythmia. Went into his doctor confirmed it and was like, thank God, your watch told you. And it was just like, holy cow, like a $300 watch at the mall could have just saved his life, whatever. So I think, and that's only, we're still in the early stages of that. So that's only going to develop further.
Yeah. And I look for those companies that are future thinking, and they're looking for how they can shape the technologies of the future. I think with the pull off in the prices, as you can see, this is a NASDAQ 100 E-mini futures. You can see that big pull off. Let me just get rid of that. In terms of the price action, I think we've got a lot of support in now. I can see, NASDAQ 100, so I like it at the moment. I think for a upside move, because the nature of the stocks in that that index, it's a future.
I like that take. So I like that take that you like NASDAQ here, because most people are saying, it overextended, they've gone too far, too fast the first couple months, and they're expecting it to go down. But I always kind of like to hear the contrarian take, because I know that if everyone on Twitter and everything is saying buy this stock, that like probably that's not going to happen, right? It's usually not that easy to do what everyone else is saying, right?
Correct. Yeah, and if you want to get rich, then sometimes the contrarian view is the one to be on. So.
Yeah. Real quick, Steven, because you said you like to find companies that are forward thinking and whatnot. What would be your like tips for someone like myself who's maybe younger, who is researching companies to invest in long term, not to trade? What would you do like first to go about finding some of these companies? Like, I want to find the next. I want to look at some like smaller companies and be able to look at their top line growth and say like, okay, this could be the next Amazon. This could be the next Apple. Where would you start?
I think it's a new world of research, actually. I go and look at what people are talking about, even in social media. There's tools that you can use for scanning, all that chat and pulling out new ideas, just seeing whether they make sense, whether you think that, they've got some future potential. And then I drill down, look at the sectors they're in, piece together the story. Does it make sense really as a product for the future? And I think the advice there is just common sense. I think if you can see it fitting into the world going forwards, it's worth investigation. And mine's a constant trawling of data and information source, and just putting shortlists together of different sectors. AI, I started there. Everyone's talking about AI this year. What stocks are in there? What do they do? What products do they offer? Does it fit into the world that we live in? And you're talking long term, it's just a future think, smart thinking, think outside the box, where you think the world's going. You've got to take a punt sort of on your point of view of the next 5 to 10 years. And that's why I sort of stay in this sort of tech stock space more than other sectors.
Got it. I like that because I think right now I'm kind of in that mode where I've been, because a lot of these names are beaten down, like growth names and stuff, trying to figure out like, okay, do I see any opportunities out there? But honestly, I think it's hard because I think like any of that stuff that we're talking about, like emerging tech, things that will change the world down the future, it's like Apple, Google, Mike, they're all already doing, so it's, realistically, you find one of those companies, you invest in it, and then Google or Microsoft buys them out, and then you get paid. So,
some of it is hindsight, look good looking back on it, but being in the right place, right time, do your homework, get stuck in.
Yeah, hindsight, I'm sure everyone was like, oh yeah, that would have been obvious to invest in Apple in 2000, after the doc. Yeah, it's obvious, but hindsight's 2020. We don't have that luxury of being able to look back. Steven, real quick, because we're up against the clock, can we talk about the dollar for 1 minute?
Yeah, sure. Yeah. It's one I like to try. Now, this chart here, it's the dollar index. Its ticker is DXY. You can trade it on futures on the ICE exchange. It's a basket of currencies, the major currencies against the US dollar, so you don't have to track them all individually. So it gives you a good idea of the strength of the US dollar at the moment. And you can see on the chart here, over 21, 22, that huge run up in dollar strength. And then we saw the weakness coming in, and that's when we also saw like the stock markets picking up as well during that time. Commodity prices, remember, most of them are priced in US dollars, so this affects commodities as well. And then we had this lovely candle playing out right on a Fibonacci line here, and we've now started to see dollar strength creeping back in, which is a bit of a negative for stock markets and some commodities, but don't think it's doing much at the moment. So what I do is I put it together against the other major currencies around the world. And you've got the green line at the top, that's the US dollar, the strength of the US dollar. Created baskets here. See, Australian dollar's weak, Japanese yen also weak but strengthening. So if I was to put a trade on at the moment, I would be selling Australian dollar. That's a commodity-based currency. Canadian dollar, your neighbour's also pretty strong at the moment. Pound has been strengthening, but
you guys have had a nice little comeback there.
Yeah, we've had this period here, but we've gone back into no man's land at the moment. We don't know where we're going, I don't think. But the US dollar is important for many things. If you're trading gold, for example, there's sometimes an inverse relationship. There's many other factors into gold trading, but if the dollar's up, gold's normally down. And you saw the run up over the new year as well in the gold price. It made it easier because the dollar was down over that period as well. So the dollar strength does have a big impact on a lot of markets. Obviously, if it's cheaper, then your US exports are stronger, and vice versa. And so always keep my eye on the US dollar, and the DXY ticker there. That futures contract's a very useful one just to have in your back pocket to watch what's going on.
Yeah, I don't know if it's always like that, but it seems like the last year or so, every when the dollar goes down, stocks go up, and when the dollar goes up, stocks go down, and so I don't know if
not that easy. No, the correlation, there is a correlation, but it's not that straightforward.
But Steven, I'm dumb, so I like when things are that easy. I wish it were that easy.
Yeah. Now there is, for example, if you're trading the S&P 500, watch whatever the VIX is doing, the volatility index. There's an inverse relationship there. So I trade that one. That's a simple one that you can follow, a real simple one. But in dollar terms, there's a lot of component parts from economic news and events, geopolitical stuff, that all throws in there as well. So it's not quite as straightforward as you'd like it to be.
Got it. Well, hey, maybe someday I'll find that perfect correlation that makes it super easy to trade and make money in the markets. Probably not, but maybe someday. Who knows?
If you do, let me know, please.
I will. You'll be the first person I let know. Steven, thank you again for hopping on with us today. We're going to have Steven on every Thursday going forward. Looking forward to that. If you want to get more from Steven, check out the Stop Hunter on YouTube. I'm going to go ahead and share that link in the chat. Steven, enjoy the rest of your Thursday and have a great weekend.
Yeah, thank you very much, and thanks for having me on.
Of course. We'll see you next week. All right, y'all, that was Stephen Hode, the Stop Hunter. We're going to go ahead and drop that channel in the chat. We've got our next guest, Mr. Steve Kalasian, hanging out backstage. Without further ado, let's go ahead and play our special intro and bring the man with the most monitors on this side of the Mississippi, Steve. Mr. Kalasian, how you doing this morning?
Hey, Aaron, how are you? Long time. It's been a while. How you feeling?
Yeah, a couple weeks. Good. I'm feeling well. I was out of town last Thursday, so we missed last week's episode. But good to have you back. I see we've got all your screens in the background. What are you watching today? And
yeah, so we got big sell reversals here on the daily time frames now. Any push up, the highs are. I mean, I think we're going to just trade it a lot lower here. I mean, even if we get a push up. We hit that 40.34 level today on the S&Ps, that 40.50, 40.80 level with big resistance, big problems for the market. Today, we had some nice shorting opportunities, big sell divergences on a lot of key stocks, Microsoft, Tesla. We had a lot of big cap, Goldman this morning, and then on the indexes in itself. But overall, I think the market is really underestimating the Fed, what the Fed wants to do here. I wouldn't be surprised if they push the Fed funds to 5.5%, 6%. And I think that's really going to boost the market. I think the second half of the year is going to be a really tumultuous time for the market.
Yeah, I mean, Stephen, you've been pretty consistent with your bearish outlook the past, 6 months. So
all lower highs, Aaron. I mean, look at this. These are, I think this pattern is not going to play out. And I hate to tell you, I think we're heading to the near 3,000 level on the S&Ps this year. And I told you that my
3,000.
Yeah.
That'd bring us down to like halfway down to the COVID lows from when, like we haven't seen 3,000. No, I meant halfway down from where we were at before COVID to COVID. Sorry, that was a confusing way to say it. But we haven't seen 3,000 since July 2020.
Yeah.
I mean, because here's the thing. Here's the way I see it, Stephen, is that the only way the Fed gets rates that high is if the economy remains strong. And if the economy remains strong, I don't see how the S&P goes down another 25% from here. I mean, we're at 400.
I'm not saying it could be 3,200, 3,250. I mean, the low is 3,501. But
okay.
I think, like I said, the ultimately, we still have a hot jobs market here, and I think that we're having I think the PPI tomorrow, I believe. I still think, like I said, these numbers are relatively strong. And what are they going to try to do to come back to bring it down to 2%? I mean, inflation's not coming down, It came down, yes, from 9 to 6.5. That's huge, but you still 6.5 to 2 is still even a bigger hurdle,
Yeah, I mean, I think that will be the big question right now is what does the inflation trend look like? Because if we continued the trend that we had been on for the past few months, then, we're feeling okay. And if it starts picking back up again, that's the big concern. But again, the way I see it I understand the interest rate fears. And again, if we get up to 5.5%, 6%, yeah, I do think SPY will be lower than it is right now. But again, I think that would be coupled with a stronger economy, right? Tight labor market, all these things. And I just don't know if we'd see, I don't know. I mean, I guess I'm just hopeful that I hope we don't go all the way back down there because it was scary when we were even at 3,500 a few months ago. So let alone getting even further down to 3,200 or 3,300. Right. And you have a lot of people who, would be basically probably not be able to retire if we get all the way back down there. Because I mean, when that happened,
but then I also think we're going to get probably one of the biggest bull markets ever that follow that in the next 6 to 12 months after that. So I think it's going to be over 5,000 after that.
Okay. So we're going from 3,000 to 5,000. That's a big, we're going to have some big moves then to get there. Well, I know you didn't say exactly 3,000, but 3,200. But
anywhere between the 3 and 3,250, I think we're going to get a push down to that level, tested. And then I think if you look at my indicator is probably telling me sometime October of this year, we're going to sometime make a bottom in the market's base for a few months and then take off in early 2024. think this year is going to be a very tough year for the U.S. equity markets.
Yeah, I mean, I don't. I disagree that I think we'd be going down below. I think because if you think back to when we were at 3,500, essentially we had, inflation at 40-year highs. China was all shut down. There were so many bad things happening at once that I don't think just the interest rates alone will get us back down there. But
Right.
Steve, you've been doing this longer than I have. I could be completely wrong. But what about some individual names?
I wouldn't touch anything here.
What about, do you have any individual names you'd short?
Oh yeah, I mean, but you trade the market. I think in any pullbacks you could be looking to buy, like obviously names already had earnings came out, like if NVIDIA pulls in quite a bit and you get some big pullbacks on the daily charts and things like that. I don't think that there's any special names here that I'm looking. I think PEs are still high, and I think that the market really needs to adjust and rebalance and set up again for another shift up.
Yeah, I mean, so right now, Steve, I mean, what would you tell not from a trading perspective? I mean, would you have people like sell their accounts and hold the cash? I mean, how do you navigate this market?
It depends on their age and what their time horizon is. And I'm never, me for how long. I'm never one to buy and hold, right? I'm more. I feel that there's so much more intraday opportunities. So for me, I think the most important thing is if you're under 30 or 35 or 40 and you want to ride it out, then fine. And I think if they get down near the levels that hopefully if they get down to there, to really accumulate, cost average down. And then I think that, the thing is, people just don't know when to sell. And I think that's the irony of this, the S&P's push up to 4,800 and people just don't take profits in their account and look for better opportunities. I think people just buy and hold and think they're going up forever because the Fed's been so, accommodating to the markets for such a long time. People just don't know how to sell.
Yeah, I mean, I'm in a, I guess, like lucky position because if you're right, an S&P 500 does go down to 3,200 or 3,000 or wherever, I'll just keep buying it and holding it, and I'll know, I'll be fine. I don't think the Fed, I don't know. I think the Fed at that point would have to really think about the implications that would have on, retirement accounts, everything else.
I hear you. I mean, but it's happened before in the past. It happened during COVID. It happened during, the 2008 crisis, and I think that, a lot of pension funds can't go short because of the Taft-Hartley Act, right? And so, but doesn't mean a lot of these funds are going to be underfunded. But overall, you got to think about the overall structure and picture of where the markets are. You got if you're going to trade your own account or do something. When the S&Ps were trading 4,800, interest rates was near 0 to 0.25% on Fed funds. I mean, it was insane. I was like screaming up and down, like, this is insane. You have 9% CPI numbers, and the S&Ps are 4,800 or higher. So I think that there's a relative lack of respect from the market, from people who just think that they just want to, it just goes up forever, because the Fed's been so accommodating for the longest period for over 20 years, And so now, when markets pull back, people start getting nervous. But again, I think if my numbers are correct, we get a decent sized pullback in the next 6 to 8 months. You get a nice base going, and then I think you're going to start off into a new bull market. But again, if you make new highs on the S&P come 2024, 25, you got to look to take profits and get out and look to readjust.
Got it. Well, I mean, I think that a lot of people are realizing that now that, our fun times of zero interest rates and everyone making money is over, and things are a little bit more cutthroat right now. I mean, even for people just trying to trade, we've been in a crazy, volatile bouncing range. It hasn't been an easy market to trade. So, it's just for most people, right, that aren't able to sit here and day trade and look at their computer all the time. That it's scary to think about. Yeah, it's scary to think about that they're
people should start looking at like some ETFs and things like that to get it acclimated with, and I think that those type of trades are going to get you, positioned properly for the future. You know, like I don't like individual names per se. I like ETFs, right? Spiders, diamonds, Qs, Russell per se. I think those are things that if the market's going to go, you're going to get better bang. I don't have to worry about earnings on all these different individual names. I don't have to worry about analyst upgrades and downgrades. I just trade, you know, the underlying market. And I think that's where a lot of people should be focusing going forward on underlying ETFs.
Got it. What about, I mean, I know you got to run here, Stephen. We're at 12:15.
Yeah.
What about treasuries? You bought any treasuries or anything like that?
I mean, I think also people should be locking in. You could probably get 4.5% on CDs long term. I think you can start locking in some of your money on that, because even if the Fed was raised, you get 4.5%, 4.75% on a 3, 4, 5 year CD. Some of your money should be locked in on that, because if they start cutting rates, guess what's going to happen? Those CD rates are going to drop, and then you're going to allocate some of the money as you position. But I'd be looking on any pullbacks here. I'd be looking to buy ETFs.
Got it. Well, Steve Klajan, I know you got to run, so I'll let you go. But thanks again for hopping on today. Thanks again for your takes and insights.
I have
as
to
always.
cut late. I'm really slammed here today, so I appreciate it.
All good. We'll chat next week. Oh, sorry. All right, that was Mr. Steve Klajan. Our Stephen Hode, our last guest, shared in some his technical numbers to the downside. He says 3,800, then 3,500, then 3,200, upside to 4,200, then 4,800. So look, everyone's got their own range on the SPY where they see it's going. Again, I'm in a position where if it does go down that much, I'm able to, or I'll be hopefully able, if I still have a job, to continue adding to those positions and holding long term. But I know for a lot of people, it becomes a lot scarier if that's the case. But I mean, and that's what I think would make this time around, if we do have some sort of like big crash like that and get down there, would make it a lot scarier, is that when COVID hit, almost immediately the Fed stepped in, and we got the stimulus checks and everything, and it really was a very, very probably the most fearful that some people had for a while, because not only did you have the market crashing, you had this whole pandemic going on that we didn't really know a lot about. But within like 2 weeks after that, the market was back up to where it was and everything, and then we had that crazy, maybe the craziest market run of all time, I would say, because the economy was essentially completely shut down, and yet like all these companies were making new all-time highs. And so that, I think if we do get back down there again and you don't have that immediate reaction that gets us back off that floor, and it might be a little bit scarier. But I don't, and this is just my prediction, my take. I don't know what I'm talking about. If I had a crystal ball and knew where the SPY was going, I wouldn't be sitting here on YouTube with you guys. I'd be like on a beach somewhere chilling, maybe a boat with a bunch of models. I don't know. If I had a crystal ball that I could, predict price targets and know where things going, I just don't see a scenario where we get that low to 3,200. Maybe that's just my wishful thinking, knock on wood. But if we do, I'll be buying down there. But guys, let's go through some of the earnings numbers from today. So NVIDIA reported yesterday afternoon. Stock is absolutely taken off, up more than 13%. Let's go through some of the numbers, because I actually don't think the numbers themselves were like that blow away crazy. You can see EPS 88 cents a share versus the 81 estimate. Revenue beat 6.5 versus 6.3 bill. So slight beat on there, slight beat on the sales. EPS strong, which you always want to see as a shareholder. But I think a lot of this buzz around NVIDIA and why it's going up right now is because of all this AI stuff going on. And if you listen to the call, NVIDIA talked like the whole call, AI this, AI that, AI this, which is smart for them to do so, because NVIDIA knows, that's where people's minds are at right now. That's what investors are thinking about. Investors are starting to recognize, the real potential of AI down the road and what it can mean for different companies. But I still think that a lot of the actual revenue, because this is all speculation, right? NVIDIA's up 13% on speculation. Well, I mean, part of it's the good numbers, but also, okay, they're pricing, or they're some people are buying it for this AI for the future. And I think the actual revenue from that will be further down the road. So I love NVIDIA. I talked about, and me and Stephen Hode talked about it, that they have their fingers in so many pies. I love it for the long term. I'm a NVIDIA shareholder for the long term. But would I be chasing it up here when around all this AI buzz? I don't know. I don't know if I would, just because I'd be worried that people start realizing, oh, all this AI stuff we're buying up is still a little bit ways down the road. With that said, I do really think there's been a lot of talk about there being like an AI bubble or, all this stuff, people just buying stock. If we go back to different times where companies have, let's go to BuzzFeed. BuzzFeed talked about how they were going to start using AI and the stock just took off. This was a couple weeks ago. Let me zoom in here on the daily chart. So stock went from like $1 to $4. Part of that was like a, meme rally, short squeeze type thing too. But essentially BuzzFeed was like, hey, we're going to use AI, and the market cap like tripled. And other companies have come out and tried to do something similar where they're like, yeah, we're starting to incorporate AI. NVIDIA is a company that's not just saying that. NVIDIA is a company that has actually been doing AI technology for the past like 10 years. And I also don't think AI in general is the type of like investing bubble that we saw last year with Web3, where all of a sudden you had all these Web3 stocks taking off and every company was saying, okay, we're going to, or even before Web3, every single company was trying to become a blockchain or crypto company, and that became a bubble. I don't see AI in the same camp as those. Maybe in the sense that a lot of companies will try to use AI buzzwords to try to boost up investor demand and all this stuff. But I mean, just the fact, ChatGPT alone, like the other day, I used ChatGPT to help me write a formula for Excel, and it was like super useful. And I was like, wow, already this AI tech has been more useful to me than any of this, Web3 or blockchain or any of this other stuff that people were so crazy about. And for that reason, because it's already showing use, practical use in like everyday life, not only for just people living their lives, but also businesses, I do think AI, it's a serious thing to be investing in. And again, finding how you want to do that is the question, because, there's a few publicly traded companies. Of course, you have AI itself, which is C3 AI. And this stock's been around for a long time. I mean, well, maybe not. Long time for me, 3 years. But been getting beaten up, and you can see here, I mean, this stock was $177 Feb 2021. That's when growth, really kind of started to top out. Actually, growth in general, I would say topped out in November 2021. So this topped out a little bit earlier. How's ARKK doing, speaking of AI? I like the idea of investing in ARK down here, but then when I go to the actual website where I see the holdings, I realize I really don't like that many of the holdings. Like, I don't love Tesla here. I certainly don't love Roku. I don't love... These are all fine. I would say I don't love Coinbase. Coinbase just isn't that interesting. Holy cow. ARK owns more than 3% of Coinbase? I had no clue. DraftKings, fine. I don't know. I guess if I wanted to invest in like emerging tech and growth, I would just like build my own, 5-10 stock portfolio and do that, because like I said, I just don't love some of the names and not just that I don't love some of the names, I don't love some of the biggest names in that portfolio. Let me see, catch up with the chat. I don't even know what the market's doing right now. Let's check the SPY. All right, well, whenever this loads, we'll check out what the SPY's doing. As always, if you got any tickers in the chat you want me to check out, let me know. Some fought the Fed from 2008 to 2021 when they boosted the market. Same people are trying to fight them now. I hear your point, Vinci Trades. I'd probably disagree, because I'd say the people that were fighting the Fed from 08 to 2021 are probably a lot of people that fall into that kind of perma-bear camp. So, people trying to fight the Fed now, I would say, are probably more in that perma-bull camp. that, want to just be buying, no matter what. And honestly, I'm kind of in that camp. Not really. Like I've made a lot of money. All right, I don't know what's going on here. Let's try this again. All right, Tesla down about 1% today. Not too bad for Tesla. SPY coming back a little bit. If we go to a 5-minute chart, you can see here we had this like harsh sell-off. You can see the volume started to kind of pick up down here, and then now we're starting to come back a little bit. What I'd be curious about right here is watching the volume, because if I see volume picking up as... Oh, wait, I just realized I'm not even sharing my screen. Stupid, Aaron. If we start picking up and the volume is picking up, then I'd really like that. All right, but let's finish running through the numbers. So again, my take on NVIDIA is I'm glad the report was good. I think a lot of people, just have assumed that semis are going to be like dead for, as long as the Fed has interest rates high, semis and growth stocks aren't going to do well. And NVIDIA proved, hey, we still had a good quarter. But again, I think a lot of the buzz going around and speculation, people buying NVIDIA stock right now, is about the AI, which I think is just a little bit further down the road. And I talk about that all the time in investing, is that there's such a thing as being too early, right? If you would have bought Apple, and I want to say it was like 1985, it's like, the joke is, all right, if you would have bought Apple in 1985, $1,000, you'd have like 10 million now. And it's like, well, actually, you'd have, like $0 because you would have sold it when it went down 80% and your investment was then only worth $200, because that's what most people do. Psychologically, if you invest in something and it goes down to 80%, you sell it or you're whatever. And that's what happened with Apple. So like, you could have seen Apple, talk to Steve Jobs, met him at a coffee shop, been like, I'm really bullish this, bought in on it, and been down on your money for like 10 years. There is such a thing as being too early. And I think with AI, especially when it comes to like, how do companies monetize it? Well, with NVIDIA, it's a little bit more simple, because NVIDIA is producing the technology that allows, like computers and stuff to run the AI technology. So they're kind of like a pick and shovel play for AI. And if you want to get even more pick and shovelly, you could do the pick and shovel play for the pick and shovel play, which would be TSM. And there might even be a pick and shovel play for TSM. I don't know. It depends on how in the weeds you want to get. But that's NVIDIA. BABA, I talked about this on pre-market prep. I get the fears right now in China. BABA's still cheap. I'd be buying... Whoa, wait, what? All right. This was kind of an easy trade that BABA was up like 6% pre-market and is now down on the day, nearly 2%. Hindsight's 2020, but this is kind of an easy trade, considering Baidu did the literally the exact same thing. I'm pretty sure Baidu beat. Stock was trading higher, and then it just gave up all the gains. I don't know if it's from people nervous about geopolitical tensions in China. I talked about it on pre-market prep this morning, why I am not necessarily as worried about the China geopolitical situation as most people are. I just think some of the fears are overblown, and I could be way wrong. NVIDIA gains. Well, yeah, didn't Microsoft already fall off from the... Because that's the thing is, I mean, like, what was the Smarter Child? Does anyone remember Smarter Child? Smarter Child was an intelligent agent or bot developed by Active Buddy with officers in New York or Sunnyvale. It was widely distributed across global instant messaging. Smarter Child became very popular, attracting over 30 million instant messengers on AIM. Founded in 2000, Active Buddy, blah, blah, blah. Like, I remember using this Smarter Child when I was a kid, like probably like 6 or 7 years, or I don't even know, and however old I was when I first got an AIM account to like message my buddies. See, they even had a... Stocks Buddy, Sports Buddy. It's like ChatGPT is basically just a newer version of Smarter Child. Like whatever happened with that, I know it's not the exact same, because I just talked about how I got some practical use out of ChatGPT, which I'm sure there weren't that many people that got any practical use out of Smarter Child. But it also doesn't surprise me that Microsoft stock has like given up those gains, because I think a lot of people have realized like, okay, they have a really cool AI chatbot. What's that going to do for revenue this quarter? What's that going to do for top line growth? What's that going to, and then the question is, it's like, well, we don't know yet. We're going to see how we can use this. We're going to see how we can. And so I think it's just too early to think like I can invest in anything AI right now and make money. Is that saying I wouldn't buy Microsoft down here? No, I mean, I probably would buy Microsoft down here, but it probably wouldn't be because of the AI. It'd probably just because in general. But I do think, again, I don't see AI in the same category of as blockchain or Web3 or these like very hyped up tech. AI is for real. AI is the real deal. It's just, I think, probably 5-10 years down the road. At least I hope so, because I mean, we're coming for all our jobs, man. I'm getting really good at pickleball though. And my like backup plan, if AI comes and takes all our jobs, I'm going to become a pro pickleball player. I don't think an AI bot could beat me in pickleball. Maybe, I don't know. We'll see. AB, did you ever check on that ecto? No. Let me Google that right now. Is that a Michigan thing? Ecto Life Facility. Oh, it's an idea. Doesn't exist yet. Oh, I think I saw like a tweet about this or something. I don't know. I mean, that's the thing, is everyone's going to... Here's the thing, is you'll hear people talk about like how dystopian AI is and how we're all screwed and AI is going to come and like ruin our life. People were writing in like the 1800s, when the Industrial Revolution started, that machines were coming and going to put everyone out of work. And then people in like the 50s said the same thing about computers. In both those instances, it was the exact opposite. The technology led to more jobs. I'm not saying AI is the same as like the machines used in the Industrial Revolution or computers. I'm just saying that's been a theme of people being really scared of new technology. And then ultimately it works. I don't know what's going to happen with AI. This story is yet to be told. What trade? I missed Vincey's trade. Gold pays. He put a gold trade out there. All right, guys, we are going to wrap up a little bit early today. And there's no stock market movers. Mitch is dealing with some family stuff, but we will have Cannabis Insider at 4 p.m. Before we go, I do want to just remind you guys that we have a free 2-week trial on pro.benzinga.com. No credit card or anything you needed. You can just use it to sign up. 2 free weeks. And then let us know how you like it. We always like feedback. And, shoot me an email if you want to continue, if you need some help getting set up on Benzinga Pro, you want to learn how I use it, you want to learn how you can use it better, happy to help out. So, guys, we'll be back tomorrow, I believe. If not, the next week. Till then, happy trading.
This is